Joining me now with $4.7 trillion in assets under management is State Street Global Advisors Chief Investment Strategist Michael Arone. And State Street happens to be the fourth largest holder of Berkshire shares with a reported 5.3% or 71.6 million shares, currently valued at $37.2 billion. Michael, we'll get to Berkshire and Buffett in a moment, but can we just focus on the fact that the market has recouped all of the post-April 2nd Trump Liberation Day tariff losses? I mean, is that it for the bad reaction?
It may be it for the bad reaction. I think that it's right that the market has rallied. The economic data has continued to signal an economy that's expanding, not contracting.
Right.
And the earnings results, Liz, have been outstanding. So year-over-year earnings growth for S&P 500 companies, with almost 75% of them reporting, is almost 13%. So a lot of the data that we're getting doesn't reflect any bad news about tariffs yet. And I think the market has responded to that. And secondarily, certainly we are seeing at least a narrative building that China and the U.S. are willing to talk, and there may be some deals coming with our trading partners. So this rally makes a lot of sense to me.
We heard that. We heard that there were deals coming. We heard that last week and the week before. We have yet to see it, although Scott Bessent, the Treasury Secretary, and President Trump have both hinted that something could happen, possibly tomorrow, when Mark Carney, the new Prime Minister of Canada, is supposedly coming to visit. And Mr. Trump says that Carney wants a deal, but it's just a matter of whether the deal comes and how quickly. That said, is that it for the buying on the dip? Did people miss it if they blinked?
They may have missed it a little bit. I think the thing that investors have to grapple with or reconcile is that most are expecting that the tariffs will have some damage in the economic data and the inflation data, in the earnings data, beginning as early as the middle of June, possibly throughout the third quarter. So, Liz, I think it's important. Will the markets react in a way where they dismiss this, to use Chairman Powell's old favorite word, as transitory, as temporary, or will they react to this news that the economy is cooling, that earnings might be a bit lower? Analysts have been lowering their earnings. And so I do think that volatility is likely to remain elevated and headline risk high. So investors probably are going to have to adjust to that over the next couple of quarters as we work out kind of what happens next with trade.
Yeah, and Berkshire Hathaway shareholders have to adjust to the new normal. And while Warren Buffett said this weekend that he was going to remain as chairman, he's putting the reins in, obviously, Greg Abel's hands, very able-bodied Greg Abel, who has been running Berkshire Hathaway Energy and all the non-insurance companies. The question becomes, what's he going to do with the company? I would imagine he will run it slightly differently. He'll keep the same culture, which is shareholders first. They call them partners, they call them owners, and they've always felt that way about it. But, you know, as we see, there's Greg Abel talking to me a couple of years ago, and he is a very affable Canadian guy who has sharp elbows when it comes to operating numbers. But the dividend question, Berkshire, as Warren likes to say, we only got a shareholder vote to pay a dividend once in the history of Berkshire, and I think I was in the bathroom at the time, so they did it when I wasn't there. He does not like the idea of paying a dividend. But do you think Greg Abel might resort to that with that massive cash pile?
I expect Greg Abel to continue along the same philosophy as Warren Buffett and the broader management team. So I think that this cash hoard that they've developed or created, ultimately they're looking to deploy that capital more effectively when the opportunity presents itself. So I don't see that changing a bit. To your point, I think Greg Abel is an operating CEO, and he'll rely on his skill set. And he'll rely on others to allocate that capital, that cash hoard that they've had, who have done an excellent job. And let's not forget, as you point out, Buffett is still chairman, so he'll still have his fingerprints on this and at least be able to be there as a sounding board. But I don't think the dividend kind of policy is changing. I think Berkshire Hathaway, Greg Abel, and the team believe that they can allocate this capital better versus returning it to shareholders. I don't see that changing anytime soon.
State Street has a huge position in Berkshire Hathaway shares. Lucky you. I mean, that's quite intelligent. When you look at exactly what's been going on today, though, and of course it's just one single day, we have a bit of a sell-off here. And I've always argued, as I've covered the Berkshire Hathaway shareholder meeting for 19 years, I've always argued that Warren is in a little bit of fantasy land because he thinks and constantly says, oh, a number of people at Berkshire are smarter than I am. Well, yeah, maybe in the aggregate they are, but it took one person, and of course with his longtime partner, Charlie Munger, but one person to run that company for 60 years. And he was such an original. He is such an original. And now he's got Greg Abel doing the non-insurance companies, Ajit Jain doing the insurance companies. He's got Todd and Ted, the two guys in charge of a chunk of the stock portfolio, which is in the multi-billions. It takes more than 4 people to do what one person has done all these years.
There is only one Warren Buffett, and we should celebrate his incredible track record. I know he's incredibly humble about it and has a great deal of humility about this, but there is only one Warren Buffett. He should be celebrated forever, right? And I think his good friend Bill Gates was out over the weekend praising him. When he made the announcement, it was a bit of a surprise, and then he got a standing ovation for a long time, all warranted, all just the incredible ability to compound those assets over that 60 years alongside Charlie Munger and the team there is just an incredible achievement. So Greg Abel needs to be Greg Abel. He's not going to be Warren Buffett, but I think this company has an approach and a philosophy that will continue to serve it well. It's got great companies with great positive cash flow, a sizable cash hoard to put to work when the opportunity presents itself. And I think Berkshire Hathaway is in great shape, largely on the back of Warren Buffett's leadership. And I think he's put together a great team to carry it forward.
Thank you so much for coming on, Michael. We appreciate it.